Good morning, everybody. Welcome to the Flow Show. We've made it to Friday. Another week under the bridge. They're just flying by at the moment, already at the end of January. Christmas seems so far away. It'll soon be Christmas. Don't worry about that. Morning, Kate.
Morning, Ryan. Morning, everybody. Oh, Christmas seems already closer.
Yeah. Flying. I don't know. It's getting old
It
business.
is flying. It is really flying.
Yeah. But at least it's flying while we're getting some volatile market moves, which makes up for it. So that's all good news anyway. Right. Let's get cracking. Going to kick off in Japan, where we've had CPI data out of Tokyo and still going the right way for Mr. Ueda and Mr. Ishiba. CPI coming in up a pip on the headline year-on-year number as expected. On the core number up a pip, the headline number up 4 pips. So up into some decent elevated levels there. Core measures as well, also looking a-okay. The ex-fresh food and energy up 1.9 from 1.8. So that's looking good. Other data coming in okay as well. With unemployment rate dipped a pip to 2.4%. Industrial production was higher. Positive numbers through most of those. Not so good amongst the retail sales numbers. Overall, year-on-year retail sales up nicely at 3.7%. There was a little bit wobble amongst some of the larger retailers on the month, down 0.7%. But running on the year, pretty decent. Industrial production as well, doing okay there too. So data still going okay for Japan. Not much to worry about at the moment. Ueda pretty much echoing that. He was out with some comments in Diet, but nothing new, just as usual. If things keep going as they should be, as they forecast, then they'll look to hike again. PM Ishiba talking up to Trump again, says Japan will continue to invest in the US and create jobs, and urges the US to provide a stable supply of energy resources. There's also another story doing the rounds that they want to get involved with the Alaska pipeline that would get them involved in energy from the US as well. So all talking nicely, data looking nicely, Bank of Japan looking nicely for a potential hike to come. Don't know when that will be. Anything you picked from that data, Kay?
No. Well, I mean, we had two things. We had those inflation numbers, which are supportive for the Bank of Japan to continue at their own pace. And then, as I said yesterday as well in our rooms, it's a bit of a double-edged sword. If Ishiba plays nicely with the Americans, it may be a factor of saying that they are not going to get tariffed, so it may be a little positive for the yen. But on the other side, if they continue to invest in the or spend, let's call it that way, in the US, it may mean that they still need to buy a few dollars. But and it started to react after Ishiba made those comments, right? So yeah, we need to be a bit careful with the sides we pick in the yen right now, based on data and/or comments on investments between the US and Japan. But for the rest, yeah, relatively smooth sailing on the data front, the unemployment rate. But yeah, we know that's always going to stay low in Japan unless they start to open for mass immigration, which is not yet really the case over there. And we lost you, unless you are drinking
Yeah,
some
I was just looking at something. There is something ticking over between Japan and China. China may be on their holidays, but they're still keeping their eyes on things. The Ministry of Commerce is responding to Japan's plan to implement export controls, particularly on semiconductor exports, to which China says they oppose that strongly, and they reserve the right to take measures to safeguard their interests, and also say that Japan's planned exports limits will hurt the supply chain. So a bit of a thing brewing there as well between Japan and China, and those semiconductor export limits. Again, it's something that Trump will probably be happy with on his side. So yeah, more sucking up it seems. But yeah, another bum fight brewing there. Brian, yeah, we'll get to that most certainly. If you weren't around our chat room or on the old social media, then you would have been you would know what that was all about. But we'll get to that in a while. Right, moving on to some of the rest of the data today out of Germany or out of Europe. France CPI coming in a little bit mixed. Headline CPI for France coming in a pip higher, was expected to go up 2. The Eurozone measure coming in a pip lower than expected, but unchanged year on year versus the 1.8 prior. Spanish retail sales, good numbers again. Well, year on year numbers anyway. I haven't seen the month on month numbers, but year on year looking good. Nice positive for Spain, still ticking along nicely, showing their northern cousins how to do it. German unemployment rose to 6.2% from 6.1%, so more good news over there. We also had, I think, we had retail sales as well. Where's that?
Yeah, very good.
Oh, there we are. Earlier, yeah, great retail sales there, down 1.6% for the month. Not up year on year as much as expected. So a pretty crappy showing coming into the latter part of the year for Germany in their retail sector. On the inflation front, we had the German regional numbers in, all coming in markedly lower, bar the odd one. A lot of losses there. Hess was the only one that went up, although there was messing around, if you remember, last month with those numbers. But all the rest coming in pretty much lower by a hefty chunk as well. We get the main German numbers later today, 1 o'clock. And as you can see there, CPI looking to come in 2.6%. HRCP 2.8, but based on those regional numbers, the number is likely to come in lower than what's expected. But there's probably some washout because these numbers jumped quite heavily last month. So there's not much to take for that. I won't go steaming into euro shorts at the moment, even though euro is down a bit. But these CPIs did have a big jump up last month. We also got ECB survey, inflation expectations survey, which saw the 1 year number jump to 2.8% from 2.4%. The 3 year expectations stayed, actually dipped down a bit to 2.4% from 2.6%. I'm going to make sure I got that number right there. Let me check 2 seconds. No, sorry, it was unchanged at 2.4%. I thought that looked a little bit dodgy. So 1 year, yeah, went up, and the others stayed unchanged. And the ECB is all about those inflation expectations. Following all that data and everything else, traders now see around 83 pips of cuts coming for the rest of 2025. That's up from the 70 to 75 BPs after the ECB meeting. And quickly why that's important, I'll explain when we get to the ECB details. US GDP was out yesterday as well, a little bit on the soft side on the headline number. However, that was overridden by some of the components. For example, consumer spending up a healthy 4.2%. Also, PCE prices holding up very, very sticky, as was touted by Mr. Powell ahead of today's PCE report for December. Core prices up 2.5%. So the underlying details in the GDP data was a bit better looking than the actual headline number. We saw a little bit of reaction in the dollar south, and then the market came around to the rest of the details looking pretty good, and we had a bounce since then. Nomura expect the Fed to stay on hold through 2025. They previously were expecting 1 cut this year. The ECB they cut by 25 pips as expected, took all the rates down 25 pips. Lagarde in the statement said the economy is set to remain weak in the near term. Manufacturing continues to contract. Consumer confidence remains fragile. Rising real incomes haven't convinced consumers yet. So pretty bearish start. Then she said expectations of recovery remain in place. The labour market is still robust, and that the solid jobs market and high incomes should boost demand, and exports should support the recovery in the absence of any tensions. Not to Mr. Trump. So she made a bearish case and made a bullish case. In a presser, she said they are discussing, or that discussing where to stop cuts is premature, and that there was no discussion about the terminal rate. The next steps will be determined by incoming data, and the 7th of February, ECB staff will publish their revision of the natural interest rate, i.e. the neutral rate. But then she said the debate on how to behave once we're at neutral is premature. Now, this is important because I mentioned those traders pricing earlier, 83 pips. As I've been saying, some of these central banks are getting into the ballpark of where they think their neutral rate will be. Now, this is a hope rate. This is where they would like to get rates into a sweet spot and keep them there for a long time. They're going to start putting numbers on this. We get the latest numbers next week, as Lagarde says. What we have to judge now is whether the market is going to get too dovish, too hawkish, or just right in terms of that neutral rate, because that's going to affect the expectation pricing for the next months of central banks. So when you look at this pricing, 70 pips, 83 pips, more cuts, match that off against a expected neutral rate between 2 and 3%. And you'll know whether those expectations are at the low end or the high end, because if there becomes a big disparity in that, there's your trading opportunities, just like trading how high interest rates were going to go and all that sort of thing. Now, we had the usual sources pieces out, and the first one said that policymakers expect another cut in March, but then a broader and deeper debate after that, which implies they may pause in April. And as you know, I've been talking about when they might start to indicate a pause. Another sources piece after that said the ECB may drop its restrictive label on its rate policy stance as soon as March. And then remember, we go from restrictive to neutral. The next step, if it goes that way, is stimulative. So this is all part of the shift in trading expectations now. Whew, a lot there. Kay, ECB, are we going to get the pause in April, do you think? And what happens next?
Yeah, again, we need to wait for Trump's traffic slides. But if you base it purely on data, they can go into as you call it, stimulative mode at some time. It'll all depend, and we've been saying that after their February March, things may start to look a bit different, but we need the confirmations of all of those. Like for now, I don't see any reason for the ECB to remain restrictive. That is one thing. But then it will depend, of course, whether the US is going to play hard against Europe on top of all of it, because sorry, putting tariffs on stuff, depending on where of course they're putting the tariffs on. But if you put tariffs on European goods when Europe is already struggling, barring Spain and perhaps a few others. I think Portugal was pretty okay as well in their data. But the rest is like really sluggish, especially the two engines. I'm not going to say what they will do in April, but I can see, let's say all else equal, I can see a cut in March and then wait and see how the first quarter data will all pan out to decide whether they need to go into accommodative stance or not.
Yeah, and March is a forecast meeting as well.
Yeah, that as well. That's an important one. And I think March, if we look at both the Fed and the ECB, to name the two most important ones, is going to probably be an important meeting because we will know a lot more about plans that the Trump administration will have towards the rest of the world.
Yeah, very much so. Right, just over in South Africa, we've had some news out. Those of you who trade the rand, Eskom has issued an alert of the high risk of power cuts, says it's used all its emergency reserves and may start stage 4 power cuts this weekend. So, so much for that, all that new stuff, and their energy infrastructure being much better. It's looking just as bad as it's ever been. Right, let's go on to what happened last night, and it was really all about, well, Mr. Trump had a little bit of conversation, comments for everyone last night. So I was just happening to sit back down at my desk to do the options right as that headline dropped. So the headline dropped that Trump has said he's putting tariffs on Canada and Mexico as per his prior instruction. The way the headline hit seemed to infer it was a done deal. He wasn't going to wait till Saturday. He was signing it off and it was done. That's why we got that big spike in dollar CAD. We also saw similar in dollar MEX as well. Then he came out, the headline came out that he was going to tariff oil as well. But then he said, other headlines said that he's going to think about or decide about whether he imposes those tariffs on oil for Canada and Mexico Thursday night. We haven't had anything since then, I don't believe. He said the oil price is a factor in tariff determination. He also said we are in the process of doing China tariffs too, and is going to be looking at Europe because of the deficits that they're running there. After all the fun and games, it became clear that what he was really saying was that he's still on course to put these tariffs on Saturday. They hadn't been signed off. They weren't in place. It's still a threat in the meantime. So that's why we got a bit of a reversal pretty quickly. Then we had another piece coming out from Reuters, pretty much as I'm going to bed. And apparently Trump's border man or border person is going to meet with Canadian officials ahead of Saturday's tariff crunch date. That didn't get bandied around too many wires, but I decided to have a little short on the back of that story. My overall opinion is I feel that Canada's probably got a bit more of a chance to get a deal done than Mexico. The reason being, one of the things Trump says is the reason for these tariffs is the drug fentanyl crossing the borders. And one of our guys in the chat room, James, he pointed out that Canada, the stuff coming through Canada is tiny compared to what comes through Mexico. So they potentially don't have to do a lot to fix that or to say to Trump that they'll fix that. We've still got all these background meetings going on. We had Rubio speaking to Minister Jolie in Canada. Now we hear that there's more meetings happening. So there's stuff going on under the surface that indicates we may still get a deal, and potentially that Trump was just twisting the screw a little bit ahead of tonight's deadline or tomorrow's deadline. So here we are. Canada had a little bit of a sell-off this morning. We're back up towards 145. Now we're in wait-and-see mode. I've been saying this week, not ruling out a gap or a big bounce, but just to be a bit wary about the size of it. I've heard people talking from 147 to 150 for a potential reaction. We knew this was coming. The market knew this was coming. Okay, we had the reaction on the headlines and then the reality, and the market came back again. We still might get another reaction if those tariffs go on, but that may not happen until the weekend when markets will be closed. So the gap risk remains. Whether we do more than what we did last night remains to be seen. But we just have to be careful of that. This move wasn't even as big as the one that we got when Trump, the day after Trump's inauguration, when we heard all that news in the first time. So if you're thinking 150 is coming, it may not happen straight away. And this is only one part of the potential tariffs as well. It's not on trade just yet. Okay, Mr. Trump is signing some executive orders later tonight as well.
Yeah.
Let our Friday night blown out the window.
Yeah, that's well, two things. We need to be on guard again, and our dinner will likely get cold while listening to him. But on the other hand, it may reduce the potential weekend gap if he already announces everything tonight, right? So that is the positive. On what he says, yeah, I think you're right. I was thinking everything may settle down a bit, but then he was so speaking so much about those big trade deficits as well that they have with Canada and Mexico. That I'm not going to rule out that he signed something nasty tonight, just to make them feel a bit of pain, both of them. Yeah. For the rest, it's really it's still possible that he gives them time, to negotiate. But so it'll all depend what exactly he signs. He signs tonight. I'm really not having a lot of positions in those two currencies because I just don't like to have positions in them. Yeah, I'm like really tiny in Euro makes, but it's nothing that's going to hurt my book at any time. But yeah, I mean. It's really a coin on its side for what he may or may not do still, because yesterday it was really sounding like, oh yeah, this is a done deal. We're going to slap tariffs on everybody, including but he didn't spend too much time over Europe. He did say that he's going to take care of the trade deficits there as well. But yeah, it's still there's still a possibility that he doesn't really sign anything nasty
Yeah,
tonight. But the hope is that he signs whatever he needs to sign, and that we don't get into weekend gaps. That's really the hope I have.
yeah, exactly. And there's really three outcomes. One, the tariffs go on as expected tomorrow. Two, no tariffs go on tomorrow when we hear nothing, which I think is a low chance. Or three, as Kay says, Mike said it as well, we might get some sort of extension. We're delaying it because there's ongoing talks and whatever. He's not going to go with tariffs. He's not going to say, no, I'm not doing tariffs and give no reason, because if he bluffs out on this, he blows his whole tariff strategy out the window at the first hurdle, and he's not going to do that.
What Deresh says over there, he may ask Canada to be the 51st state. Okay, I think from Canada's point of view, that's never going to happen. But you have a point, because he was hammering so hard on those trade deficits and paying for everything in Canada. He says, I don't know why we should do it for a country, but if you were a state, we may continue to support that. But it's a bit of a thing. I mean, Canada will never ever accept it, right?
Yeah, and it's also, this is a state of what we've got to deal with. He started off last week, last week, saying that he wasn't potentially going to go too hard on China at first and might be taking it easy. And then last night, we're working on China tariffs. This is Trump. He can swing his comments from one thing to another day to day. And unfortunately, there's not a lot we can do with it. As far as trading is concerned, you either profit from it or you take a hit on it. And that's the way it is. I'm short dollar CAD. I will not be short dollar CAD going into the weekend if we haven't heard any news on what's happening, not by any way, shape or form. And if I can get out for a bit of profit today, I'll do so. If I have to take a little loss on the headline, so be it. I'm not like Kay, I'm not in any huge positions. I'm not going to be risking my account trading his mood swings. So it'll be what it will be. Right, we've still got more stuff going on because then later on last night, Trump was out saying that any country trying to replace US dollar will face 100% tariffs, and there's no chance that the BRICS will replace the US dollar in international change or replace the dollar in any way, shape, or form. Now, the Kremlin was out, aka Putin was out this morning with a reply saying that the BRICS aren't discussing a common currency, which we didn't get that sort of headlines when Biden was in the House. So it sounds a bit concessionary, shall we say, that they're not willing yet to pick a fight with Trump over that. Okay, he's been a bit neutral. He hasn't been very confrontational since Trump's come in. We've obviously still got trying to fix the Ukraine situation and everything else. At some point they're going to meet, or something's going to give. Do you think?
It's I'm trying to weigh my words because I want to remain politically correct. I think they know from each other what they want to do. That's my conviction. They have been talking behind the scenes. Nothing official. He probably did it before he was the inauguration. Similar with Xi in China. I think those three know from each other what the plans are. So any official headlines, I'm taking them with the necessary bag of salt. Now, not thinking about a common currency. That's still very possible because um, it's tough when you are, and now I'm just going to speak from an economical point of view. It's tough when you are fighting real or economic wars here and there to start rallying behind a common currency. Let's say for a minute that it's the yuan that they were looking at. How do you marry this idea with people who are in India, Brazil? South Africa is probably a different issue, but because they have so many problems that they may accept whatever goes on. But the rest, how do you rally them behind a common currency to go as far? Now, there is a difference between having a common currency and having common markets, and so you can say we are not talking about a common currency, but you can very closely cooperate on a certain state of common market in fixed income and stuff. So there is difference that will economically and in the facts also have an impact if they would do so. So I'm taking all those lines with a bag of salt. And yeah, I still want to see because he was talking about the Ukraine-Russia war again last night as well, saying that it should never have happened, and a deal could be made. That he's going to that's his next thing after the tariffs that he's going to take care of that. Well, let's see what comes out of it. But that's how I would stand against those comments about common currency. And we were having a discussion in the room also. I was asked a question about de-dollarization and everything. It's like such a big word. I think Trump in a way is somewhere right in saying, well, I mean, in the back of his mind, it's going to be impossible to move away from the dollar. It is going to be impossible for as long as everything is denominated in dollars that you trade around the globe. The thing is that the reserves. So everybody is talking about the reserves and the dollar as a reserve currency. If you look at of course, a state of wars and stuff like that. Some of the dollar reserves in some countries have been reduced, but if you look at it in a global scheme of things, 2024 was not a year where dollar reserves have been reduced. Actually, on the contrary.
Yeah, thanks very much, mate. Good explanation as always. Well, that's it from the headline front. Unless there's anything else you've got, Kay.
Thanks, but no thanks.
Good, good. That's what I like to hear on a Friday afternoon. Right, now let's get stuck into what's going on in markets. Not a lot going on in some of the pairs. We have got end of month as well. The final day today. So keep that in the back of your mind. If you see any flaky moves around the tops of hours, you know what it likely is. We have had a little bit of a breakdown, a very small breakdown. We were sort of knocking around this 85, 90 area. Euro dollar, we've had a little mooch down. Still a lot of people looking at that 103.50 right in the middle of this zone I've got here to maybe get into some longs. We'll see if we get a test down there and what happens with that. Dollar yen on the mooch, having another little bounce up off this level down here, this 50 retracement down towards that 153.75.80 area. So that's proven to be a bit solid. And lo and behold, come up for a test of 155 and it's resistance already. So, you know, the boundaries here at the moment, which way we need to go to get to force a move in either direction. Cable as well. There we go. 124 on the nut and we bounce. So we're still playing the half pips, half figures and double O's on that one there. But largely he's had a fairly quietish week, Cable, given what's been going on before. Again, a bit of a sign of easing tensions in the UK and whatnot. Euro sterling still dragging down. Kay, you're thinking this might be a little bit month-end related.
It could be. It could be. Yesterday we had a bit of a sample of the month-end flows, and people were saying like, oh yeah, dollar getting hammered because the GDP is lower. James in our room made a really good comment that we hit the top of euro dollar and the top of a lot of euro crosses as well on the 2-hour bells in our time zone, that is, and then it started to come off again. I think it may be month end somewhere related as well. If I look at well, stuff that I look at in equity divergence, bond and some of the bonds, it could be month end, and it's a bit, it's a bit of a battle of the ugly, right? For the time being, because if you look at sterling, okay, there's nothing like really alarming, but then when you see the measures of business confidence regularly coming out, they are not going to say collapse in the UK, but they are not doing well either in the UK right now. So that's that's one to keep in mind as well. But I still think the euro in as such is a bit weaker. But we will see today after the fixings whether we print a low or not in this euro sterling. It could be. It could be, and then next week we'll see what happens again. But of course, I mean, it could also be impacted by what Trump wants to do. You know, if he says, "Oh, we are going to do something about the European deficits," but he stays mum towards or about the UK. I mean, euro sterling can trade back down to your low 82s in the meantime.
Yeah, and we've obviously got the Bank of England coming up as well.
And yeah,
And
as well.
yeah, we'll see. It's still might be a bit of a knife edge whether they cut or not.
And
That's still
yeah,
in play.
and then you're talking about interest rate differentials, real ones. If Bank of England doesn't really go too hard on the cutting pedal.
Yep. So all to play for. We're bang in the middle pretty much of the range. So we could go either way from that. But it's give or take, it's holding the big levels where it should be holding. So 82 is the big one down below, has been pointed out. And we know that 84, 80, 25 is a big one above. So it's moving between the ranges. If you can go a trade there, that's where it looks like it's paying off. Right, dollar CAD already covered. This is going to be a bit of a wild horse. We had a little mooch back into the range, but this is one where your tech levels are probably not worth leaning on too hard, given that spike and what news may come You know, if we get headlines that a deal's been done, we're probably going to be trading down through 143, maybe even through this low, down to 140, low 142s, something like that. So if you're going to trade anything or look at your charts, pick your wider areas where any of these moves may run out, because that's probably where it's going to be most sensible to trade as well. I'm going to have a quick look at S&P, then I'm going to bang it over to Mr. K. We are up around these highs again, depending on what futures contract you want to be looking at. We're coming up back towards here. Cash is still holding below the 61 level. So we've had this little fake out. It's got the potential. We come up here and get through there again. Well, let's look at it in the cash market. We go up through that high again. There's maybe a good chance that this time will be the break that we go for. I might have another little go on that, but I don't know if I want to be doing that on a Friday afternoon. So be careful with that one. Quick look at yields. 10s are still hovering around. We did a little poke below the 450 yesterday, but we're back above now. Bounce is looking pretty weak though. We're still in this getting into these lower highs by the odd spike. So be careful with that. If we are sustainably moving under here, then the dollar's probably going to get a lot weaker. Dollar yen in particular will pay attention to that one. So this will be one to watch for the close today as well. Right, Kay, let's kick it over. All yours.
Okay, gold, as I'm usually looking at. So yesterday we went for the break above the prior high. We're still above, so the best we can do now is to look at extensions if you want to look at the technical picture. So the next level is around 28.20, and then up in the 28 and a halves. On the ultra long term, there are some decent targets around these 28 and a halves as well, but it still all depends on how hard Trump is going to go. People are now saying that this gold move is kind of a move away from the dollar. But again, I've heard those stories so often. It is just something that I've been saying for a very long time, that I'm still a gold bull for various reasons. But my main reason is not at all a move away from the dollar right now. My main reasons are the uncertainty about economies, somewhere sticky inflation. It's a hedge against a lot of bad things as well happening, and therefore, despite those yields holding up, therefore I still think it is a trade to be in for in the course of 2025. I still think in the course of 2025 we'll see higher levels in this. Now Ali is asking about levels to re-enter. I mean, it'll all depend on whether you look at it from the long term or the short term. I think if you look at it from the more medium term, as I said, if all of a sudden we end up seeing it's not going to be too bad on the tariffs or so, we may see a move back down. But we've also seen that when the rumors came out that they may not all be too bad on the shorter term, we came back into this 2730 zone and then started to bounce here again, 2740s, and we bounced. So that means to me, and since we are still hovering around those all-time highs, this still seems to me that the market is not ready to let go. So corrections will still be bought, in my opinion, unless we get something really extremely strong in the US. But and there I'm going to join what Ali says, like in rough terms, is that I do expect that if the US goes hard against everybody, it's going to hurt them at some point as well. But we will see about that a bit later. In the meantime, the picture is what it is. Prior high broken, all-time high broken. It's still quite bid on gold. Okay, so and if you look at the short term, well, I mean, really intraday, Um, long above with a stop below this high here, perhaps 27.85. That's a small risk. That's about a 7-8 bucks bucks risk. If that's an intraday play, potentially. We had a quick look at 28, but so far it's been rejected. Um, that's about all I can say from it right now. My overall bias, I've been repeating this enough, is still for these to trade higher at some stage. Silver, it's holding this little break pretty well for as long as we're above 31.10-ish. 31.10 is still looking pretty good. Um, Bit of resistance here in this zone, but overall, looking still pretty good, this silver. So the first zone to be careful now is if we would get back below 31 bucks. Okay. Somebody was asking about the Aussie dollar. I'm going to have a look at the Aussie right here. Um, it's a fragile break. I don't know what's going to happen on the on month end or so. Could go a bit anywhere, but overall, it's still not looking good. Okay, so short term, we need to get back above those 62 30 40s on the Aussie to go back up. But more for the medium term players, this is still a very negative picture, and we are going to need to get above 62, 70, 80 for a starter. This could be the start of something, but for me, the really the big area is going to be back at that 63 and a quarter. The day Aussie turns back above 63 and a quarter, the bottom is likely in for some time. But in the meantime, for as long as that does not happen here, then I think there's potential to get back to lows, especially if per correlation against China also the Aussie gets a little knock on the head, we could head down there. Now, um, longer term, I don't think we are going to get back down here. I wouldn't think so. Regardless, whatever RBA may come up with in the next meetings, I don't think we are going to drop anywhere near their levels that we saw in 2020. But if I see levels getting closer to this one here, around the 60 and a half zone, that is going to raise my antennas, because I think for the more medium term, it may sooner or later we may find a bit of a top in the dollar. But timing is going to be very important as well. In the meantime, just a quick look at these ones here. We are in Euro Kiwi, Euro Aussie, we are trying to go up and down. If things are not as bad as they may seem on tariffs or whatever, looking at the state of Europe still, I wouldn't be surprised that sooner or later we come out of this wedge here, more to the downside. And on the Euro Aussie, Euro Aussie has a little bit different picture than the Euro Kiwi, but there also, if we start to get back below levels here, 66, 30, 50, I would be a bit careful on the Euro Aussie as well, because we could see a move back down. Don't have a position right now, but I'm just monitoring this for further developments. And yeah, you've done already the dollar yen. I think that's in a range right now. So this euro mix, and I said I'm really tiny in position. Yeah, I'm. It's just a chip, that I have on the table, just in case Trump wouldn't go too hard against the Mexico after all initially. I'm going to monitor it here around 21 three quarters. First zone here around 21.60, and see how it goes. If it breaks above there, I don't think there's any use for being short again. But as long as we stay in here, there's perhaps a bit of a chance, as I said, but it depends on what Trump decides, perhaps even already tonight, that we are going to have a look back at those lower levels after all. I decided to do euro because this is the weaker one between the euro and the dollar. I always look at the other side of the pair to see which one has the more potential to either side. So, for instance, if I'm looking at buying currency, I may go in a euro cross because the euro is the weakest. If I'm looking to sell a currency, I may perhaps choose the dollar right now to be long a dollar pair. If I judge the other side of the pair, the other currency is at risk for weakening a bit. And I think for today, that's going to be it, Ryan.
Thank you very much, mate. Good stuff as always this week. And yeah, I think we'll call that a day. I'm pretty knackered as it is. Don't forget, we've got PCE data later on, though that might largely be redundant as Powell spilled the beans on the numbers at the FOMC, but you never know. So keep an eye on that data later. Apart from that, not a lot else out. Canadian GDP, and then we sail off into Mr. Trump's latest executive orders. So that'd be fun and games. Thank you, as always, for coming to the Flow Show this week and giving us your support. Always a pleasure to have you here. And we'll see you bright and breezy on Monday morning. Have a great weekend, everyone.